welcome to the deep dive. You asked us to jump into, well, probably the most high-octane corner of computer hardware right now.
Yeah, the quantum computing space, it's certainly capturing attention.
Exactly. And we've got the results from a pretty powerful stock screener, pinpointing the big movers.
Yeah.
So our mission today, deliver you an expert journalistic report on the top 3 pure-play stocks showing just explosive movement.
We're talking Rigetti Computing, D-Wave Quantum, and IONQ.
Right. And we're not just looking at standard fundamentals here. We're really digging into that tension between the tech hype and the financial reality.
That's the whole story, isn't it? I mean, this sector is defined by these absolutely parabolic price moves, gains measured in, thousands of % over a year.
Thousands, yeah.
But sitting right alongside these company profiles that, if you look at traditional metrics, they look extraordinarily weak.
So valued purely on the future promise.
Almost entirely. Riding the coattails of the AI boom, the whole quantum tech promise, it's all future-focused.
Okay, so here's the plan. We'll unpack each one. Rigetti, D-Wave, IONQ. We'll look at their valuation. Those price-to-sales ratios are something else.
Hundreds, even thousands. Yeah.
Their financial health, or maybe lack thereof in some areas. The technicals driving these wild swings. Key news triggers.
And that hypothetical paper money math scenario, just to see the scale we're talking about.
Just for fun, yeah. Now, before we dive in, we do need to say this.
Ah, yes, the mandatory bit. Look, this discussion is purely for educational purposes. Okay? We're analyzing publicly available data. It is absolutely not investment advice, not a recommendation to buy or sell anything.
And seriously, the volatility in these specific stocks is it's extreme. Be aware.
Very extreme. Okay, let's get started.
All right, let's kick off with Rigetti Computing, RGTI. You could argue this one really distills that quantumania perfectly.
It's a good place to start.
It closed today at $54.91. That's up 25% in one day. Puts the market cap near $18 billion.
$18 billion. So the big question is, what's an $18 billion company actually selling right now? Well, not a whole lot yet. The numbers are, frankly, staggering. They really highlight why this sector is so controversial. Rigetti's annual sales, currently just under $8 million.
$8 million on an $18 billion valuation. Wow.
So look at the price-to-sales ratio. That classic measure, market price versus revenue, it's 2247.46.
2,247.
What that basically means is investors are pricing this thing as if its current sales are going to multiply over 2,200 times, soon.
So it's entirely a bet on tech adoption years, maybe a decade down the road, not next quarter.
Precisely, not next quarter. And the margins, they confirm it. Deep R&D mode, gross margin is negative, almost minus 40%.
Ouch.
And the profit margin, it's cratering, over minus 2,000%.
So just to translate that, they're losing money even before covering basic operational costs, burning cash just to get a product developed.
You got it. But, and this is key, they have that survival feature you see in these early-stage tech plays, phenomenal liquidity. Their current ratio, quick ratio, both over 41. That means cash reserves are like 40 times their immediate liabilities, almost no debt.
Ah, so they have a huge runway.
A massive financial runway. And honestly, that's the only thing supporting that 2,200 PS valuation right now. Without that cash pile, it wouldn't hold up.
Okay, so where's the risk and reward playing out now? The technicals must be off the charts.
Oh, they're screaming mania. RGTI's performance over the year, try 7-0 and a 69%.
7,000% gain.
Yeah, it's not just flying high, it's parabolic. The RSI, the momentum indicator, over 84. That's significantly overbought territory.
Way overbought.
And get this, the 200-day moving average, that long-term health line, it's nearly 280% below the current price.
Whoa. So momentum's huge. But historically, that suggests a massive correction is almost inevitable to reconnect with the average.
It strongly suggests it, yeah. History isn't always predictive, but that's a huge gap. Which brings us to the analysts.
Right. What do they make of this?
Well, it's fascinating. The consensus is strong buy, rating of 1.12, but their average price target, $25.86.
Less than half the current price.
Exactly. So are the analysts just missing the boat on quantum potential? Or are they being, the responsible adults when the market's clearly acting irrational?
Good question. They're applying traditional models, I think, to a market that's not playing by traditional rules right now. They see the positive news, like $5.7 million in recent purchase orders for their Novera systems. That's good.
Okay.
But they also see the massive cash burn, the market. It sees headlines like quantum stocks look like they're forming a bubble, or its inclusion in a meme stock ETF, and just rides the AI hype wave past those cautious targets.
And what about insiders? Are they buying or selling?
Recent transactions show selling, about 23% negative insider transactions. So some executives are definitely taking some money off the table during this huge run-up.
Okay, let's do that paper money math.
Correct.
Just for perspective. Say you'd put $10,000 into Rigetti at its 52-week low. That was $0.74. Okay, 74 cents. That would get you roughly 13,513 shares.
And if you hypothetically sold at today's close of $54.91.
Let's say, yeah, your profit would be around $739,726.
Wow. A return of about 320%?
Astonishing. And that kind of number, that's the psychological fuel driving a lot of the enthusiasm, right? That possibility.
Okay, so if Rigetti is like pure hype and that massive cap growth, D-Wave Quantum, QBTS gives us a slightly different picture, doesn't it?
It does. Similar explosive growth, but some key differences in the financials.
It closed at $40.62, also up big today, 23%. Market cap around $13.89 billion.
Yeah.
How's the valuation compare?
Well, the price to sales is 623.83. Now, that's still incredibly high, obviously.
It's stratospheric, yeah.
But it's significantly lower than Rigetti's 2,200 plus. It suggests maybe better current sales performance relative to that valuation.
Okay. Still losing money on an EPS basis, though.
Oh, yeah, negative trailing EPS. But analysts seem a bit more optimistic here. They're projecting 5-year EPS growth above 15%. Still a long road, but maybe a clearer path than some others.
But the really interesting part, for me anyway, is the margins. D-Wave has a high positive gross margin, 82.46%.
That's the kicker, isn't it? A huge difference from Rigetti's negative 40%.
What does that tell us about their core tech, their pricing?
It tells us their core business, basically the cost of goods for their quantum systems, is potentially very efficient, highly profitable at that basic level. So if they sell a system for, say, $100, they keep $82 of that revenue to cover everything else. The problem is everything else is enormous.
R&D, admin, sales.
Exactly. All that operational overhead just drags the final profit margin way down to like minus 1,263%, severely negative.
But that positive gross margin is a big signal, right, for eventual scalability.
It's a huge positive signal for the underlying business model, yes, if they can scale revenue faster than overhead grows.
And like Rigetti, they've got great liquidity.
Outstanding. Current ratio is over 42, minimal debt. They also saw healthy sales, quarter-over-quarter growth, about 42%.
We're also seeing institutions stepping in more here. Ownership nearing 50%. Institutional transactions up over 23%. Doesn't that suggest the, quote, smart money sees something real, even with that crazy PS ratio?
It absolutely does. Big institutions are positioning for the long haul, clearly willing to stomach the current cash burn for that future potential.
Okay, technically, still explosive.
Very much so. Perf year is over 4,350%, and today's action gave a key technical signal. The closing price, that $40.62, broke clearly above its 52-week high. That's a classic breakout. Textbook, really.
But RSI is still high. Still overbought.
Yep, RSI at 77.75. Definitely flashing overbought, similar to RGTI.
And the analyst view. Still that disconnect.
Even more so, perhaps. D-Wave gets the strongest analyst recommendation of the three. A perfect 1.0 strongest buy. The target price. Still way below current trading, $23.30.
That gap between analyst targets and market price just keeps defining this sector.
It really does. The news helps the bullish narrative, though. D-Wave just announced a successful project with the North Wales Police.
Oh, yeah. What was that? Optimizing vehicle placement using their quantum system. And crucially, they reported it outperformed classical computing methods. Real-world validation. That's gold for investors in this space.
Exactly. It gives them something tangible to hang on to amidst all the future tech talk.
All right, let's run the D-Wave math. $10,000 invested at their 52-week low of $0.88.
Okay, 88 cents. That gets you about 11,363 shares.
Sold at today's close, $40.62.
Would give you a hypothetical profit of roughly $451,591.
So a 4,542% return. Still immense, though slightly less vertical than Rigetti's run.
Still demonstrates the massive upside potential that risk capital is chasing here, absolutely.
Okay, last one, IONQ. IONQ. This one's the biggest by market cap.
Yeah, largest of the three, $24.44 billion market cap, closed today at $82.09, up a solid 16% or so.
How does valuation ratios stack up?
Elevated, but again, comparatively lower. PS is 466.62. Still very high, but not in the thousands like Rigetti.
But the earnings picture looks worse.
It does. They report the most negative trailing EPS, minus $2.02. And interestingly, their projected EPS for the next 5 years is still expected to be negative, minus 2.61% growth projected.
So analysts see a much longer, maybe tougher path to profitability compared to D-Wave.
That seems to be the implication, yes. More capital intensive, perhaps.
And financially, what about margins?
Well, IonQ's gross margin is almost flat, just 1.14%. So technically positive, but barely breaking even on the cost of the hardware itself.
Not great.
No. And like the others, operational and profit margins are severely negative. But on the plus side, sales quarter-over-quarter growth was explosive, over 81%.
That's huge growth. Liquidity's still strong.
Yep, very healthy cash position. Quick ratio over 7, minimal debt. Standard story there for these guys.
Technically, how does it look? Performance over the year was big, 760%, but that's actually the lowest relative gain from the 52-week low compared to the other two, isn't it?
It is, which is fascinating, right? Still a massive gain, obviously, but suggests maybe a steadier climb, perhaps more supported by institutional buying rather than just that pure retail mania we saw, especially with Rigetti.
Is the RSI lower too?
It is, around 66.46, so strong momentum, but not quite as deep into that extreme overbought territory.
Okay, now what's really interesting with IonQ is the flow dynamics, right? Highest short float.
Yeah, highest of the three, 21.83% short float. So despite the soaring price, you've got a significant chunk of the market betting against this growth continuing.
Interesting tension there. They did hit some positive news recently, though.
They did. Achieved a record quantum performance milestone, something called #AQ64. Drives that AI quantum hype cycle. They also acquired a company called Vector Atomic.
But the big news was the equity offering, wasn't it?
Absolutely crucial. They announced pricing for a $2 billion equity offering, basically selling new shares into this high valuation.
Smart move, strategically. Use the hype to fill the coffers.
Brilliant move. It funds that long R&D roadmap directly from the market enthusiasm, capitalizing on the cycle.
But, and this seems like a big but, what about the insider activity here? The data seemed to show heavy selling.
Very heavy selling. Our source material detailed numerous completed sales by executives, directors. Insider transactions were nearly 40% negative overall in recent months.
So the company is raising billions selling stock to the public at these high prices.
While insiders are personally selling a significant amount of their own stock at those same high prices.
Yeah, it definitely complicates the bullish narrative.
It absolutely does. It's a stark contrast to the soaring price and the institutional buying.
Okay, final paper money math. $10,000 invested at IonQ's 52-week low, $9.62.
Right, that'd be about 1,039 shares.
Selling at the last close, $82.09.
Would net a hypothetical profit of around $740,373 to cent.
The 753% return, which sounds huge in isolation.
But compare it to the $450,000 from D-Wave or the nearly $740,000 from Rigetti on the same initial investment.
Yeah. It really puts the sheer volatility profile of RGTI and QBTS into sharp focus, doesn't it? The potential reward and implicitly the risk was just on another level there. Hashtag outro.
All right, so we've done our deep dive into these top 3 quantum pure plays. Rigetti, D-Wave, and IonQ. I think the core takeaway is really this quantum paradox, right?
Absolutely. You've got this explosive technical performance on one side. Year-long gains from, 760% up to over 7,000%. Just mind-blowing numbers.
Mind-blowing, but coexisting with financial profiles that show, universally negative operating margins, sales valuations that are hundreds, even thousands of times current revenue.
The financials confirm the thesis we started with. These companies have massive liquidity, almost no debt. That's essential, right, for surviving what could be a decades-long R&D cycle.
Got to have that runway.
But those deeply negative margins, they shout that the current valuation is based almost purely on hope, the hope of a trillion-dollar industry eventually showing up. Right now, they're highly efficient capital consumers, not profitable businesses. And the market seems to have just completely divorced itself from traditional analysis here. Technicals screaming buy, breakouts happening.
Well, the analysts covering them have price targets way, way below where they're actually trading. The stock price isn't reflecting earnings forecasts. It's reflecting sheer unbridled momentum and hype.
Yeah, it's pure momentum play right now.
Which brings us back to that really interesting data point, especially with IonQ, but visible across all three to some extent, the insider activity.
Right, we saw the paper money math, those potentially astronomical gains from the lows. Exciting stuff.
But then you see the significant insider selling. Multiple executives, directors cashing out shares during these huge run-ups.
So that leaves a crucial question for you, the listener, to think about. Are these executives taking profits because, deep down, they think the current valuation is mostly today's hype and maybe not sustainable long-term?
Or are they just prudently diversifying? Selling a small fraction of massive holdings, still incredibly confident that the rest of their share will become exponentially more valuable down the road.
It's impossible to know for sure, obviously.
But that insider sentiment, seeing them sell while the company raises billions and the stock flies high, it adds a really fascinating layer of complexity to this whole high-stakes, highly futuristic sector, doesn't it? Something to definitely mull over.